Analysts at Credit Suisse upgrading the energy giant to outperform, raising the price target to 125, writing that the company is well positioned because Exxon maintained investments in oil and gas projects as some of the other global majors cut back while embracing the energy transition. Let's bring in Renaissance Macro Research Chairman Jeff deGraaf. Jeff, as we try to figure out just how much more this sector and names like Exxon can run after being up 40% so far this year, what did the charts tell you?
Well, the charts say the trends are still in place. And I think as important as anything, Sarah, is that the relative trends are still in place. They were extended, no doubt about it. They were sort of the only game in town for a while, and they're correcting. And we had, in fact, our note this morning just noted that we had over 90% of the energy constituents oversold in our proprietary work. So we were looking for some type of rebound and frankly, probably a resumption of the uptrend. But I do think importantly, what viewers should keep in mind is that the energy sector on a relative basis will peak roughly 6 weeks prior to the peak of the inflation data. So it's a really important sector to watch because it does tend to be a window into the soul of inflation. And if we start to see deterioration in the relative performance, which we really haven't seen yet, that would be an indication that the headline inflation and the things that the market worries about from an inflationary standpoint are probably very close to peaking.
Okay, let's talk broad market because we're seeing a pretty nice sizable rally today, Jeff. 2.6% on the S&P. We're back above 3,700 on the S&P. NASDAQ back above 11,000 and the Dow is back above 30,000. Not sure if these round numbers mean anything to you, but what do you do? Is this a tradable bounce? Is there more to it than just a day when a lot of people look at it and say the fundamentals haven't changed and they're still feeling very bearish?
Yeah, I think the trick here, and this is so endemic of a bear market, you'll get these nasty, vicious rallies that obviously are great if you're long. I think there's a couple things to watch. One is energy's leading today, right? And so if we're really seeing some type of seismic shift, I wouldn't expect energy to be leading. So that does make me a little uncomfortable that this is more of a bear market rally than not. I thought the best thing that we've seen in the last week is a spike in some of the put call data we look at. So the bearish positioning had swelled to a point where historically, if you look at the stats, give you pretty good reversionary data and returns. And I think that's exactly what we're mired in here. Look, I think we can rally to 4,100 without changing anything on the S&P. That's a little more aggressive than what our call is. But I certainly think that the oversold condition that we had is producing this reversion all within the context of this downtrend. And I think your guest just before me was talking about this deflationary period with the money supply. And look, we're seeing it, right? We're seeing it in crypto. We're seeing it in concept capital. We're seeing it in these things that it should be happening in. And I think there's more to that story for 2022.
We're also below average volumes today, just looking at some of the numbers on this rally, though many more advancers than decliners, about 2,500 to 800. Thank you, Jeff.